Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, February 7th, 2016. So we had a pretty nice move down on Friday. It was what I was anticipating, and I'm just going to continue to say don't fall in love with the short side. Yes, we have our stop in place. If I see there's going to be any kind of gap, most likely I'm going to remove that if it's to the upside, because I don't want to get stopped out in the first minute of that type of thing. But if we get a push down on Monday, then I'm most likely going to be either really tightening that stop on the SDS or just taking it off altogether, because I think that we really want to start watching for where a low is going to be. And I think that the next low that comes, whether it be tomorrow, whether it be Tuesday, is going to be a very good tradable long side trade, and it's probably going to last a little bit longer than some people are anticipating. I think it's going to turn everybody really bearish on this market if we open down on Monday or continue down on Tuesday, and that is going to really open up the door for a really big short covering rally. And nothing has really changed as far. I'm going to continue to watch the pattern like this, where this low that we made in January is a wave A. And now it's going to break off into an A, B, C, where we're going to make a wave B. And, I'm not counting out that we can see the S&P trading all the way up at the 2042 to close this gap here. Now, obviously, it's not guaranteed, but you can see we have the moving average at 1990, and then we have another one at 2040. And typically what happens is we'll come up and test these before we start down. So I'm looking at it as a wave A, and now we're in the process of an A, B, C, and this will make a wave B. And then from there, that's when we take these lows out. So if we take a look at the 60-minute chart, I've been showing you this head and shoulders pattern, and we're right at the neckline right now. Now, this is what I believe is going to be the trap for many bears right here, because they're going to be looking at this pattern and expecting, a move all the way down to the 1811, maybe even lower than that. And the way that if the pattern is correct that I'm following here, this is our A, this is our B, this is our wave A here, and now we're making an A, B, C of a B, and that should really hold someplace around the 1840 level, or a little bit higher than that. Now, obviously the first thing the bears have to do is push it through the neckline, and then from there, that's when we start looking at where the possible low could be, and like I said, we could see a move come someplace down to test this support here at 1860. It may even come all the way down and do the full ABC in a perfect thing and come down to the 1840. But as long as these lows hold, this pattern is still in play, where all it is an A, and this is your ABC of a B, and then we're going to make a wave C, and that will be our wave B. So again, I'm trying to show you this in an Elliott wave kind of format, but not getting overly, tied down to it. And I think just showing these ABC moves is the easiest way to do it. So if in a perfect world, this is going to be taken out, we're going to make some type of low, anywhere down in this area here, and then it should be followed by a short covering rally that could take us, like I said, as high as 2042. Now, if I'm wrong and we continue lower, well, we still have a short position. So it's not, it's not going to be the end of the world. But, like I said, in a perfect world, it's going to stop here, and then we're going to make a wave A. I meant a wave C of a B. Now, let me go back here. So we're getting pretty close to the oversold levels here. If we take these lows out, most likely we're going to have a bullish divergence in place, And if we look at the 15-minute chart, we already have a bullish divergence in place. We're very, very overbought. So this is kind of what, where I'm looking at. It could be something like this, where we make that final low, maybe an early pop and then down. But really, again, if the bears push it through here, we have a 62% retracement level. That's also support. That's at 1863, and then we have price support at 1860. So this is your, the first support area that we want to look at. And then if it breaks that, then we're probably looking at a move down to the 1848 or 1840. So this is your first support level. If this breaks, then we start looking down to these levels here. And again, if they hold and we continue to see these bullish divergences, and then we see one form on a 60-minute chart too, it's probably going to set up a pretty decent buying opportunity. And really what the bulls have to do, they have to push it through the 1890, and then we have the 1899, which is the moving average resistance. But if they get through this level, most likely we're going to make a move up to the 1906 and then the 1917. So bears need to push it through the lows on Friday. Bulls need to try to hold the 63 and 60. If they lose that, then we're going down to the 1848, 1840 level. Bears, to continue the momentum down, really, the first line in the sand that they have to hold is 1892 and then 1906. If we start breaking through these levels here, then most likely the low is in place, and we just want to accept that. You don't want to be married to the short side right here, especially with the divergences and very oversold levels. So you can see here, this is just a little downtrending channel, and right now it kind of looks like a bull flag the way it is. So if we come back to, so again, it goes to that 1900, which is really going to be the line in the sand for the bears to defend and what the bulls need to push through. As long as this holds, the momentum is still going to be to the downside. Once this breaks, that's when I believe that we can say the lows are in place, and we're probably heading back up to that, somewhere closer to the 2000 level. And again, from there, it's probably going to be a fantastic shorting opportunity. But I think right now, the best breed that I have is that we probably have a little more room to go on the downside. Once that's done, the larger move from these levels is most likely going to be to the upside, and we want to start switching sides and start getting into the SSO. So with that, let's see what plays out tomorrow. I hope your team wins the Super Bowl, whoever you're rooting for, and I will talk to you guys in the morning.